Hello, folks. Brandon Chapman with you today for another Theo Night video for Monday, October 24th, 2022. You look at the market today, we are finding a new high close. If we look at where we closed today, it's the highest level since when? Well, we'd have to go back to September 20th, 2022. So a little bit over a month ago. So is this new high or this new high close, is it bringing a lot of jubilation in terms of optimism? Normally, if you're optimistic on the market, you tend to buy the stuff that's more beaten down, that's more cyclical. For example, how about technology? It was up 1.38% today. What about materials? Down. What about industrials? Up decently. But really, when you look at the top performers today, it was really much more defensive, in particular staples. When you start to break down the healthcare trade today, it was up nearly 2%. When you start to look at the top holdings within this, let me find it here, XLV top holdings, which you'll notice, Abbott, okay, but, Abbott sold off heavily. Today's move was more just making back losses. What about Danaher? Again, big losses. We're catching a bounce off support and a lower low. AbbVie, this is one that did break out on Friday, is continuing higher today. They do have earnings coming up on the 28th on Fridays. That's a little tough, right? Lilly, this is breaking out. Merck. So when you look at the healthcare space, United Healthcare, we have what? We have insurance companies and we have your pharmaceutical type companies, biotech. You look at Johnson & Johnson, broke out yesterday or Friday, for example, continuing its move today. A lot of this is a little bit overextended. So it just all depends on the space you're in within healthcare, with certainly your pharmaceutical type companies doing better than, let's say, like a Medtronic, for example, that's still consolidating, or CNC, which is a health insurer. A lot of it in kind of that a government insurance space, CHIP, Medicaid, that sort of thing. So, again, is it broad-based? I guess maybe. But when you start to look at the healthcare space, and we're going to look at a number of companies today, healthcare being one of the top performers, again, it still paints more of a defensive picture, with healthcare taking out its prior couple of highs here. And as we look at just the retracement off of the downtrend, certainly might be reasonable to see this trade towards $73 in the near term. As we measure the seed wave here, get you to the 50% retracement at about 72. Moral of the story as we look at the S&P 500 is that this is not exactly the leadership that you want to see. This says the market is on the mend, that we're likely to achieve brand new fresh highs, 4,800, 5,000, whatever on the S&P 500. This looks much more like a market. It's basically looking to retrace prior moves, maybe towards 3,900, possibly 4,000, which basically tells you we're in the same position we were nearly a month ago down here at lows again. So don't get so over your skis thinking we're going to go rocketing higher. With the Fed set to raise rates dramatically going to the end of the year, we have a lot of data points that could derail this thing a little bit. The other side of that coin is that from a volatility standpoint, VIX right now is still elevated near 30%, although it was down slightly today or up slightly today. Skew is down here as of last Friday. This is an end of day data point, was down here at about 116. When you have low skew, it means that the upside potential is a little bit greater. And so we're kind of squeezed in this position where we're very similar to where we were last June, July. The difference being is that when we got this rally, it was the expectation that the Fed may be pivoting. Those pivoting expectations have largely eroded over the last couple of months, and in particular in the last month. So again, without that kind of pivoting type expectation, we're probably not expecting to see some major move a la we saw back here in June and July, and of course July into early August, bringing a really significant short squeeze. And again, that's kind of today's leadership. It really points to the fact that you're not expecting to see like your your short squeezes like in an AMC and these kind of companies that are going to really outperform. This is going to be led more by defensive-oriented companies, and maybe a smattering of technologies might fit the bill. Your bigger cap names like an Apple, for example, will likely move with the market. Your Microsofts will likely move with the market. Your Amazons, some warnings there, but these companies are a big percentage of the indices. So as a function, if the market's going up, these companies may go up. Amazon so far probably a bit more of a laggard. Apple's had some rather negative news, but today outperforming the S&P 500. And you look at Microsoft today, definitely outperformed the S&P 500. However, it does have earnings coming up. And again, this adds to the confusion here. Apple on the 27th. We look at Google on the 25th after the market close. So we have a lot of big earnings this week that represent all these companies over 20% of the S&P 500. So any positivity we see here could really change by the end of the week as we see these big companies announce. And if they announce and they miss and we see some downside movement in the share price of those specific names, this is going to drag the market lower. And maybe in that case, staples hold up better. So again, be careful this week because of all the major earnings. Right now, the market's positioning defensively today more so than it is positioned for a major move higher in the market. It's not to say there aren't, let's maybe take a quick look at some of these defensive-oriented plays. Now, on the scan tab here, I scan specifically within consumer staples, and there was some trade in Coke today, Keurig Dr. Pepper. We're gonna look at those two specifically. I kind of avoided Mondelez, but anyway, look at MDLZ here. It caught a nice bounce. But let's take a look at Coke. I mean, Coke's one that we talked about, or I talked about, and I can't remember if it was in this Monday video or one of my sessions during the week. Bullish activity in Coke back here in early October, and it's been kind of back and forth a bit, finally kind of breaking out today. Granted, it does have earnings coming up tomorrow before the market opens, but what we're seeing here is some upward movement leading into that. Now, tomorrow, looking at this announcement, okay, so we're gonna get a sense before the market opens where Coke does stand. We can look at the bid and ask to get a sense of where the price is pre-market. But the big thing is there's three things you want to see if you're looking at Coke for a potential move here. I'm going to redraw these fib lines. Number one, you got to see them beat earnings and revenue, right? EPS and revs. You want to see, number two, you want to see them raise guidance, raise those expectations in the future. And number three, you want to see the stock price go up, right? You want to see that the price is confirming the news. So if you're looking at Apple for a potential move back to, let's say, prior highs here at 65, I mean, this is probably what you want to see. And even if that jumps up to 69, you may have $6 of upside, and the process may be risking maybe $2 to $3. The risk reward's still pretty favorable there. But as I'm going to redraw my fib lines and just going to activate this drawing, extend it down to lows. And you'll see that we got this kind of 61 areas of potential near-term targets. So if the earnings don't exactly light the world on fire, but we hold up here, we stay above this kind of 57 level off of a bounce, we could see maybe Coke running towards 61. Now, the trade today in Coke, this was for a weekly option. You see all this kind of activity kind of out here. You can go down to the time and sales and kind of add it up down here, for example. You look at the option statistics. Again, you could just center specifically on the call side for October 28th. As you break this stuff down, it does look like it's mostly buy-side activity at 57 in particular and 60 out here. So as we look at this, interest coming in at 60, again, it certainly looks like we might have a chance of breaking into the upper tiers here at 60 and 61 in the near term. And again, we will have to have the earnings cooperate. Another beverage company, which this is one of the better performing industry groups today in the market. This had kind of a downward sloping channel here that we already broke out of. We're now in an upward sloping channel, a series of higher highs and 3 higher lows. You know, you kind of look at the highs back here at kind of 40.5. I'll shave off that. I'm going to shave off that shadow there. But we draw our fibs from high down to low. You'll notice we're currently sitting at around 38.5, which is about the 61% retracement. If we take this out, so tomorrow look for some breakthrough. Earnings again are coming up on the 27th. So you might wait for earnings, but this has a chance to maybe run towards $40.5, retesting the prior high, again, excluding that kind of upper shadow there. Now, today in trade on Keurig, this was on the 18 Nove. This does not have weekly options, but the 40 and 41s were being bought out here mostly. And again, it gives you a sense of what 40-41 is back up into this upper expectation or upper range based on the highs back here from mid-August. So again, defensive-oriented name, earnings are coming up, expectations, this is for November expiration, but 40-41 up here certainly seems reasonable. Unfortunately, earnings do cloud things a little bit. You can do some things like, for example, if you want to play the earnings, you could go out 18 over is the only choice. You could maybe do an upside spread, right? 39, 41. The skew's not very favorable up there, so that's what really makes it more difficult. Don did a class last week. Liquidity here isn't as good as it probably should be, but it's called the flyby trade. It's again, it's a combination of a butterfly and a vertical added to it. It helps provide a credit, so you don't have any downside risk, but you have a target zone the stock can trade in to make money. So if it goes down first, you have a chance to unwind it a little bit and then capitalize on the upward move. So again, you're welcome to check that out, TheoTrade.com. We're also going to launch one of our Trade Zaba portfolios utilizing the flyby. So anyway, just some thoughts out there of ways to take advantage of the upside when the skew is not working in your favor, but it also removes the downside risk if the market were to sell off and your stock doesn't perform. So again, kind of trying to have your cake and eat it too. Obviously, there's trade-offs in any strategy, but that's one that Don did a class on last week, and it's one with which you can get access to just subscribing to TheoTrade. You get access to all of our stuff, all of our classes. Anyway, a couple of interesting ones there. Another defensive-oriented play today was Dollar Tree. Dollar Tree breaking out. Volume was a little higher, a little bit above average. You look at the range here from 134 to about 146, $12. I mean, that gets you to about 158, pushing the 2/3 retracement up here, and that also gets you above the high of the high of the gap day. 825 would suggest maybe closing the gap up here. So I think this is one that's interesting to watch. Now, with these defensive-oriented names, you'd think, oh man, they're experiencing positive analyst revisions. The expectations for the earnings ramping up. The answer is actually for most of these companies, no, it's not. But you will see we are seeing some defensive rotation here. Dollar Tree is just another one of those in the list. If you look at, for example, pharmacy companies, healthcare companies like CVS Health. It's a pharmacy and also provides healthcare. Again, you look at this seed wave projection, 97.5 in the near term, possibly maybe getting back to about the prior highs. They do have earnings coming up on November 2nd, but again, you're seeing strength in CVS and also Walgreens Boots Alliance. Walgreens Boots Alliance is a stock that saw some significant option activity come in, call option activity back here in late September, finally starting to turn around. Had a nice little bounce, thought it might come back and retest the highs here. We're certainly in the mode right now, measure the seed wave of that possibly occurring if this strength continues. The stock's already announced the earnings. The result was a positive move and a subsequent higher low in Walgreens Boots Alliance. It also pays a great dividend. So whether you're either short term, probably a little bit overbought in the short term, intermediate term, looking at up here close to 40, or longer term as an income play, this stock does pay a very high dividend at 5.5%, both high relative to other stocks and high relative to its history. Kraft Heinz, so KHC, after a nice run, a pullback in today's bounce. Again, the wrinkle is earnings coming up on before the end of the week. But as we measure this kind of seed wave here, I mean, you're looking at this thing maybe getting back to about $39 as a near-term target for KHC. And again, it may get there all at once during the earnings, but this is one that does become intriguing. And we look at the weekly expected move; it's about $1.80, for this week's expiration. So you take its current value, add $1.80 to it, you get to about 38.30. So you're starting to near this upper band up here. So you might look at this as maybe taking possibly a bullish trade, just speculating on an upward move. One approach is using butterflies. The earnings are coming up on the 26th. So that allows you to maybe put it on tomorrow. Normally we like to put on butterflies on Wednesday for an earnings. But again, it's one thing. Or you just play it straight up like an in-out spread, just angling for the upside. As you look at the implied volatility for this October 28th, it's kind of an all or nothing type trade. You could potentially get a little bit out of the money at around 37.5 to 38.5 here. Sorry, 37, 38. The vol's pretty flat. Is a fairly priced vertical spread. Just looking for the stock to push 38 by post earnings, realizing that full expected move just to the upside. Finally, SMPL. This is a food stock as well. Stock's had a huge breakout on its earnings. This is the seed wave here, and this is one that we've looked at in the past. It's kind of a busy chart here. Sorry about that. It's achieved its 161. It's a bit over. Let me just clear the drawing set here. It's a little bit overbought in the near term. However, it's at the 161. If we can take out this close at the high of the session on good volume, this is one that you might look at maybe running towards $42 up here into this 223 to 261. You could take this these last two candles, large candles, blend them together in a single candle and look for maybe a little bit of support at 35.50 if you were to pull back here secondarily at around 37. So you could look for a little pullback and a bounce, but be prepared. This thing may run. It's a little more iffy sometimes entering in such a big move like that, but sometimes they do continue on their path. And you look at the implied volatility here, $5 spreads, it doesn't really work out all that well. But anyway, so yeah, that's it. See how the rising volatility out here. Again, you're buying. Well, actually, 40, 45. Buying that, selling that works, but buying that and selling that doesn't. So $5 spreads really wide, but buying the stock, if you want to swing trade, look for a little pullback towards that kind of 35.5, 36 area. Look for a bid, and again, this may have a chance to make a secondary run. So I realize we're going over a lot of kind of bullish ideas today, but again, I think the market is poised to run a little bit, in particular, if we can get decent earnings this week from some of those key names we did discuss. Now, one that has been consolidating, and it's forming almost something called a diamond type pattern here. So you get this kind of rising highs, lower lows, and higher lows here. The range on this sucker is from about 73.5 to about 70.5. So we're talking about $3. If we start to break to the upside or break to the downside, you're looking at a $3 move in either direction. So maybe 68.5 up here at around 73, get you to about 76. If we measure the retracement of this downtrend here, we're looking at 76 is around your 61.8% retracement. But be prepared for it to go either way. Now, today there was a roll that did occur, and if you look out here for a November 66.5, again, there's more in here as well. This is closing, this is closing, that's closing, this is opening, that's closing. So most all this is closing activity. You would assume so because volume is less than open interest. But this one was kind of interesting because it's out of the money. It's 66.5, and it's actually a bit beyond what the projection would be based on the diamond pattern, but it does give you a bearish expectation for a breakout. The $25 strike price here, 25. Sorry, 66.5 strike price in here again, down in this level. So this may be, again, a breakout to the downside. Watch for that breakout to occur either up or down. But if the bond market continues to show weakness, you see TLT's been running lower. what we have not seen is spreads widening between corporate bonds and treasuries, or at least widening to the degree they eventually will. And so maybe we start to see it crack. So just so you know, HYG is something that would probably break to the downside if the market were to sell off. So we're kind of boxed in here. We're seeing staples trying to eke out whatever gains it has left. You have high yield or junk bonds consolidating, looking for that continuation in its bearish trend. You probably expect that in stocks like COF that has earnings this week. You expect the bearish breakout and stuff like, IYR, which is a REIT ETF. Your AGNCs has already announced or has an earnings coming up tomorrow. We're looking for a continuation of the downside in a lot of these financial or consumer credit or mortgage stocks, even your home builders looking for downside breakouts. So HYG would kind of accompany likely a bearish breakout in those particular names. But if the market remains calm and we continue to see it edge higher, you probably see staples continue to make their move. Gold yesterday or Friday got a nice bounce. Not doing a lot today. We're really looking at the dollar continuing to strengthen here. You see the breakout, the potential intervention, and today we're getting, wiping out the intervention that drove it back to 145 for a moment, which is kind of that level that the Bank of Japan had previously defended. And so again, the yen is in a world of hurt right now. The dollar generally, look, EUP is probably poised to see a bit of a bounce here, but if we see it break support, this will help support the market, fuel maybe some of the movement in these stocks. And again, what probably accompanies that also is probably some positive earnings from Apple and companies of that like. Anyway, folks, we're out of time here. We'll catch you back next week for the Monday video. I hope you have a great week.